Welcome to today's market report. European stock markets are seen edging higher at the open on Monday, helped by positive economic news out of both China and the US. However, trading ranges are likely to be tight as the earnings season winds down and focus remains on US lawmakers over additional stimulus. DAX this morning traded 0.5% higher, FTSE 100 rose 0.4%, CAC 40 climbed 0.6%. China saw its factory deflation ease in July, according to data released earlier on Monday, boosting hopes of economic recovery in the world's second largest economy. The country reported a higher than expected consumer price index for July, with increases of 2.7% and 0.6% year-on-year and month-on-month respectively. July's producer price index also beat the previous month's figure, although it fell 2.4% year-on-year. The PPI has now registered a full year of year-on-year declines. This follows on from Friday's US jobless report coming in slightly better than analysts had forecast, and news on Saturday that US President Trump signed a series of executive orders to extend unemployment benefits to a certain extent after talks with Congress broke down. According to JP Morgan, if we see the White House take the view that they no longer want to negotiate until after the election, then think we will see a wave of GDP downgrades, followed by lower realized spending and spikes to unemployment in September through year-end. Important economic data are thin on the ground in Europe today, while the corporate earnings season is entering its final stretch. Capita could be of interest after stating Monday that it has secured a £355 million extension to its contract with Transport for London to continue to manage London's congestion charge, low and ultra-low emission zones. French engineering company SPY jumped 5.7% after a double upgrade to buy from Jefferies, while Dutch tech investor Process slid for a third day running as US prepares ban on two popular Chinese apps, WeChat and TikTok. Heavyweight sectors like technology and healthcare fell 1% and 0.4%. Shares in energy majors BP, Royal Dutch Shell and Total rose nearly 2% as crude prices gained after Saudi Aramco raised optimism about Asian demand and Iraq pledged to deepen supply cuts. Crude futures traded 0.5% higher at $41.83 a barrel. Brent contract rose 1% to $44.83 a barrel. Gold futures though rose 0.8% to $2,034.10 per ounce. On the FX front, GBP USD picks up the bid near 130.70, up 0.16% on a day, while heading into the London Open on Monday. The cable registered the biggest losses since 24th of June on Friday. However, the US dollar's failure to keep the latest gains recorded the bulls, despite not so upbeat headlines from the UK. Two top-tier economic indicators await cable traders. Tuesday's jobs report will likely remain robust. The unemployment rate is set to remain at 3.9% in June, exactly where it was in January before coronavirus grabbed the headlines. The second event is GDP figures for the second quarter. Economists foresee a bounce in June to mitigate the crash already reported for April and May, resulting in a minor decline of 1.8%, similar to minus 2.2% in the first quarter. GBP USD 10-day exponential moving average near 130.30 precedes the 130 threshold to restrict the quote's near-term declines. However, both are less likely to find an easy run unless crossing 132 on a daily closing basis. Euro-dollar is trading around 117.65 after Friday's 0.75% decline, the biggest single-day drop in over 4 months. Turkish lira extends drop in sign of further Turkish market turmoil, whilst the dollar index was trading up 0.1% at 93.477. This is today's market news. Thanks for listening. We'll see you next time.